So, folks, of late, we have been getting a lot of requests to cover some topics around financial planning. And today, we are pleased to present our very first episode on personal finance management. By failing to prepare, you are preparing to fail. This is a famous quote by Benjamin Franklin. And no one would like to be a failure, particularly when it comes to a matter related to family, like falling short of funds to finance your child's education, compromising on your child's marriage expenses, failing to buy the right property to stay, failing to fund your dream vacation, and compromising on your lifestyle post retirement. Yudhajit Financial Services helps in achieving financial goals as they have been helping more than 1,000 families globally to achieve their financial goals. After working close to a decade in multinational banks like Barclays, Standard Chartered, HSBC, and broking houses like Kotak Securities, Yudhajit founded Yudhajit Financial Services, which is popularly known as YFS, in 2012 to provide comprehensive financial advisory services to individual and institutional clients. Under his leadership, YFS has fostered relationships with clients globally and in all major cities in India. A proponent of financial literacy, Yudhajit has conducted more than 1,000 hours of workshops and seminars on financial literacy and investor awareness. In fact, many of his articles have been featured in popular business newspaper. So in today's episode, let us get Yudhajit Baul's insights on managing personal finances. This is the Guiding Voice podcast series, TGV for a better future. This podcast is to help professional students, IT employees, and entrepreneurs to shape their careers. So, folks, in case if you have not rated and reviewed our podcast, request you to provide your rating and leave a candid review. This is your host, Naveen Samala, and I have about 18 years of rich and diverse experience in the IT world. In every episode, we interact with industry experts or thought leaders or academicians or coaches across the globe to drive some insightful conversations that will help each one of you learn some amazing stuff. Also, we share an interesting trivia or a fun fact towards the end. Folks, you will acquire more knowledge per every minute by listening to TGV than any other podcast in this space. Thank you so much for tuning in. Before we get into today's topic, which is managing personal finances, let me welcome Yudhajit officially to the show. Yudhajit, thanks for being part of TGV's journey in shaping the careers and lives of millions across the globe. Welcome again. Shall we get started?
Hi, good morning, Naveen and Sudhakar. Thank you so much for giving me an opportunity to come in your show and interact with you. And I will try my best to simplify certain concepts which are very important and integral in terms of planning one's finances. And I look forward to having a very engaging session with you.
Wonderful. Glad to have you part of our journey. And let's get started, Yudhajit. Can we talk very briefly about how you have reached your current position, the top three things that have helped you?
So, Naveen, I started Yudhajit Financial Services in the year 2012, and my objective at that point in time was to offer a very comprehensive financial planning and wealth management advisory service to our clients. Uh, Before starting 2012, I worked with various multinational banks like Barclays, Standard Chartered, HSBC, Kotak Securities, and Aditya Birla Capital Limited. Over my close to a decade-long experience in the financial service industry, I realized that I was not being able to do justice to my clients when it comes to offering the financial planning advisory service, because I always felt that the approach that is part of the institutional organizations are more sales driven, and very often that compromises with the client's financial goals. And that was definitely the main objective why I started Yudhajit Financial Services in 2012, so that we have an approach in place where we look at helping our clients visualize their various financial goals at different stages of their lives. Like building a corpus for retirement, creating a corpus for child's education, buying a property, and all these goals are time defined. And you need to plan for these goals. You need to have a plan of action in place so that you can achieve those financial goals. And that has been the main objective. When we started in 2012, we had only 5 clients, and today we manage close to 1,000 odd clients globally. And predominantly, we have grown our business exponentially by word of mouth and through references. And that's how that's 10 years have been quite a roller coaster journey. And today we cherish that we had taken that opportunity and worked hard to achieve wherever we are.
Always it is good to see what has happened in the past, and definitely we cherish a lot of moments which seem to be pain at that point in time, and I can see that you're very proud of what you have done so far. So Yudhajit, what are top 3 things that have helped you as an individual to start as an entrepreneur and all?
Yeah, I think as an entrepreneur, biggest risk that you can take is the entrepreneurial risk, I would say. And it's a combination of journey and destination both. So when I started, and hailing from a very I would say a service background, from the perspective of as far as my family is concerned, uh, we are used to a scenario where my father has worked in his organization for more than 25 years, and there was always a kind of nudge that you should also continue with your the cushy job that you have in your corporate life. But I abandoned that comfort and plunged into entrepreneurship. Um, One thing which has always helped me is being positive. Eternally, I believe that I'm an optimist, and I've always tried to make the best of the situation. Yes, initially we struggle a lot. Initial 3 years were a lot of struggle. When I had to take almost 70 to 80% cut as far as my salary is concerned. But after 3 years, the journey has been very promising. And what has always helped me is in terms of the happiness, the smile that we see today in our client's face. When we see them achieving their various financial goals, when they tell me tacitly that because we started investing with you under your guidance, we have been able to finance my kids education. So that is the only motivation we have for that, and that has been the only motivation that has been kind of driving us forward more and more. So yeah, I mean, optimism is, I would say, one of the very important factor. Second, I always believe in discipline. Being a practitioner of martial art, I have always learned and realized that regular practice makes a lot of difference. Like an investment, regular investing towards your financial goals would always help you in achieving your various financial goals as it compounds. So similarly in work as well, if you make those efforts and if you do it diligently and regularly, you are bound to achieve your various goals. So that has helped me tremendously. And third, I always believe that today's context, staying focused is very important, because we should have a vision in place where we would like to be in various time frames, and that vision has to be a very comprehensive vision which should encompass not only your career but also your personal life. And therefore it is very important that stay focused and map your destination with your journey. Similar to, I can relate to it because similar to, it's like managing portfolios, managing clients aspirations and helping them achieve their various financial goals. So I apply all these factors in my own life in different facets of my life, and that has helped me.
Great. So there is one coincidence on the martial arts part. I've also practiced Budokan karate when I was in
Oh,
my third or fourth standard. Well,
fantastic. I did my black belt second dan in Budokan, and
I
then
was
I went on to.
oh,
Okay.
That's good to know. I was just a green belt in
Okay.
Budokon. However, master black belt in Lean Six Sigma. So that belt has been carrying
Oh,
with.
fantastic. That's
Yeah,
wonderful.
very interesting. And you summed up optimism, staying focused, and discipline are top three things. Yeah, I can truly sense that.
Right.
Now, let's talk about you being a great financial advisor, right? So, when did you start managing your own personal finances? We would like to understand that.
Well, I would started realizing the importance of proper planning and managing own finances early in my life. When I was 13 years old, I remember there's a personal anecdote which I can relate to it. When I was 13 years old, I saw my father losing his job because there was a lockdown in his company, and we went through a lot of difficult times, and so that has hit me hard, and at that point in time, I realized the value of money. I started being very, very frugal and being very cautious and careful as far as my expenses are concerned. And then later on, I realized the importance of having a vision, having a habit of saving and investing judiciously. So I would say that is a turning point in my life where I have started being very, very careful when it comes to manage my personal finance.
Quite interesting to note that you got an awareness right as young as 13-year-old. Great.
Right.
So now, specific to the Indian tax perspective, I would like to ask you a question with regard to the savings and all,
Right.
because if we are aware about certain savings which are already there, but probably people are not utilizing other than ATC, like what kind of savings can people opt for to save some tax from the Indian perspective?
See, first to begin with, is very important for one to understand that what tax regime one would like to cater to optimize their earnings. And so there is an old regime and there's a new regime, as we would know. And therefore, it's very important for one to plan ahead from a financial year perspective, that what are the options which are available. Okay, so for example, somebody who is at a highest income tax bracket, we always recommend to go ahead with the old regime, because that would entail larger savings for him. Okay, so therefore, in that context, one needs to plan very well. If he's an employee, he has to give those declarations in the HRA, LTA, and various segments which are there. And then one needs to understand that what are the sections available. So under section ATC, one can invest 1.5 lakh in various component like insurance products, like equity linked savings schemes or mutual fund schemes. Then employees provident fund, PPF, principal of home loan can also be considered. Then comes section 80D, and this is something which I felt that we ignore a lot, especially when it comes to salaried employees, because ATD is it covers. I mean, if you invest in health insurance for you and your family, you get the entire. You get a benefit of 25,000 for your family, and if you contribute 50,000 premium for your parents, so that entire tax exemption benefit comes on ATD, right? And very often we ignore that because we get a health cover from our company, but we don't realize that tomorrow if we quit our job, it would be difficult for us to take a coverage on our own, because obviously our health doesn't stay the same and our age doesn't stay the same, right? So that is something which we conveniently ignore. And third thing is the NPS. NPS comes under section 80CCD. So that is also a fantastic, I would say, provision where you can invest 50,000 every year and save 15,000 of your tax towards building a pension corpus. At 60 or 65, whenever you choose to retire, you would get annuity forever your life. And then if something happens to you, the annuity income is passed on to your wife or your spouse or whoever is your nominee. So I think these are the three sections one needs to keep in mind. Besides, obviously, if somebody has a home loan, he can take benefit under of two lakhs, limited 2 lakhs towards the interest payment. That comes under different section altogether. So I think these are the four sections which one needs to keep in mind, and one needs to plan very well. Therefore, must take advantage of these options which are available to optimize the savings and investments.
Great. I think these inputs will definitely help the audience plan their tax savings appropriately. And now let's get back to the personal managing the personal finance stuff. Like you started as early as 13 years, and if you observe some of the fresh grads, okay, who get into a job for the first time, right? And altogether, they are starting with huge pay packets, which we have not imagined in the last 5 to 10 years and all. And at times the moment they start earning money, right, they are prone to spend it okay, just lavishly, or maybe they tend to do some wrong investments and also. Out of your experience, what are some common mistakes that the early stage professionals do?
Yeah, I think definitely a big pay package results in more disposable income, and that disposable income often people don't know how to handle that disposable income. So and also there is always a inertia of maintaining a certain social status in terms of having a high end phone and car and so on and so forth. So people tend to splurge a lot, and with the accessibility of consumer loans, it has become also very much possible to finance those kind of aspirations. But what I always tell my clients, especially the younger generation, is that, see, you are in a stage where it is very important for you to kind of visualize your not only your career growth but also your personal growth. In terms of your family life, or and therefore it will bring in a lot of commitments which will have financial implications, right? In terms of marriage, in terms of having children, and in terms of retirement, and so on and so forth. And if they don't save judiciously, and that saving is not channelized into the right financial products, they would end up compromising a lot on their lifestyle post retirement. Because one thing you can't ignore, that with the advancement in science and technology, especially with respect to medicine, the mortality rate or the longevity has gone up, right? And with AI and automation and so on and so forth, people uh, tend to retire much sooner than they would rather desire to. But whether they can afford to, or whether it would be viable on their part, and if at all that happens, then they need to have a contingency plan. And that is where it's very important for them to realize that what they should do now, so that they should have a enough in in when they retire. Another thing is that we have seen that from an economic perspective, globally as well as in domestic context, the interest rates on various savings products have been declining, and we expect this trend to continue. So we are today in a stage where there's a negative interest rate, or we call it the real negative interest rate, where inflation is more than the interest rate that you earn on your deposits. Now, imagine when you retire, you have a stage like this where you would not be in a position to take additional risk. Uh, at the same time, the your retirement corpus is invested in in various instruments where your return on investment is not even meeting inflation. Then what happens? Your purchasing power parity declines, and that results in kind of a erosion of wealth, erosion of purchasing power parity. So all these things one needs to keep in mind, and therefore, from the very beginning, it's always prudent to be careful and to save more and invest more, and align your say investment to various financial goals is the best way to handle this.
Mhm. So, do you have any specific advice for students? Okay, before they even start their career, somebody who is about to graduate, in terms of what should be their thought process before they even get their first salary?
Yeah, I always feel that, actually for students, and I would say it's important that students should visualize. I mean, I've always telling these to various colleges where I have addressed. See, it's always important that they visualize the worst outcome. And what could be the worst outcome? The worst outcome could be is that tomorrow, if the sponsor, you don't have a sponsor who would finance your education. Now, what would you do? Would you be in a position to complete your education? Number one. Now, number two is, and then what is that you need to do now so that journey is not disrupted. For when you have this kind of a visualization in place, the student itself or any person for that matter would automatically responsible and would probably surrender some of the indulgences that one is one goes through in the student life, and be more careful with their expenses. Now, as somebody who is on the verge of graduating, it's very important for them to kind of understand and visualize what are the impending expenses. If somebody gets a job immediately after graduation, then it's good. I mean, there's a cash flow which would be coming. If not, if there's a loan in place, and if there's a delay in getting a job, then he has to finance those loans. So what I typically tell them that it's like you keep 4 or 5 jars or basket, and you tape them. This is for your short term, and short term could be, say, 6 months of cash flow till you get a job. Okay, and then you have something like 2 years down the line you want to buy a car, and then you have something like, say, 4 years down the line when you would like to marry, and all these will have various expenses. So now, as a student, what best you can do, because you anyway don't have any income. So whatever savings you can master up by saving, or by working, by doing kind of internship, put in those baskets, and just keep kind of protecting them. And I mean, by basket, I don't mean that keeping idle in your bank account, but what I mean is that by investing in the right financial products so that they grow. Okay, so I think that is something which it would help them tremendously. Visualization is very important, and having a contingency plan is very important. uh, if you connect all the dots, you would be able to come up with a solution yourself. So that is, I think, what I would like to advise to the students.
Excellent tips. In fact, yeah, it is very helpful for someone if they can manage to visualize the things in terms of how they want to plan their lifestyle and plan their savings accordingly. So thank you for those excellent inputs. And Yudhajit, now, if at all someone wants to learn more about this personal finances and all, or if they would like to enhance their knowledge, like what are certain resources that you would recommend?
See, I think there are a lot of content which are available at this point in time. To begin with, one needs to understand the very basic concepts of savings, expenditure, investments, understand the economics, understand, I mean, the very, very, I would say, basic aspect of the economics, like microeconomics, some idea about the macroeconomics, develop some idea about the investment options available, understand the risk, commensurate return on various financial products, then try to create a financial plan for themselves. It's like you have planned, or anybody would plan for their career. Similarly, you should also be able to plan for your personal finances. It's not that difficult, to be honest with you. Most people don't put enough effort in terms of understanding the various concepts, and therefore that's where they lack in and they seek guidance. But if we spend enough effort in terms of understanding what it would matter to me or to themselves, then definitely the results will be available and be visible in front of them. So keep things. It's very simple. The way I look at it is that you have your expense, you have your savings, and you have your income, right? So your savings is nothing but the income minus expenses. Now, the other way of looking at it is your income minus savings is your expenses, right? So basically, if I have to save X amount of money to achieve my various financial goals, then I would rather control my expenses, bring down my expenses, and enhance my savings than otherwise. So I need to have that in mind. I'm clear about that particular aspect of it. Then I think I'm in a much better position to manage my finances.
It's been fabulous conversation so far, Yudhajit. I think definitely all the
Thank
insights
you.
that you have shared are going to help the student community. And as we discussed, we are going to do a couple more episodes covering the young professionals as well as mid career professionals and entrepreneurs on mind. So definitely, I would like to have you again and again on this podcast series. And yeah, we would like to
Thank you
lighten
so
up the
much.
conversation, okay, by by switching over to rapid fire round. So typically we ask some basic 5 questions, okay, which are going to lighten up the mood of the audience so that they can get a glimpse of other side of Yudhajit. Okay, if you're ready, I'll fire the bullets from the rapid fire.
I'm ready.
Perfect, perfect. So let me get on. So Yudhajit, if you were given a chance to time travel to past or future, which one would you prefer?
Both actually. Past in the sense that I would definitely like to rectify certain aspect of mind, which and future is something which I would I have a certain vision in place, and I would like to see to realize those goals, and so therefore a combination of both is something which I would desire.
Very interesting. So here comes my next one to a financial guru, and very,
Right.
very curious to know your answer. Like, what would you do if you won a $1 billion lottery?
Well, $1 billion is a lot of money, and the way I see it is that I would definitely look at starting a business. I would definitely look at investing in my own business, and of course, I have made some baby steps towards addressing a very important cause. And Vision Capital would always look at would help us in terms of enhancing that. 1,000 clients, and that we are just a drop in an ocean, and therefore, capital would always look at helping us in terms of reaching to lots and lots of clients. And not only we would like to have a presence globally, and our idea is to kind of very passionate about this cause, because we always feel that people need counseling, people need financial advisors to much as they need doctors, because I've seen myself a wrong decision as far as managing the finances can lead to disasters. Relate to it personally, and have also experienced after we interacted with so many clients. So therefore we would like to I would definitely like to look at investing my own business, and that would entail generating employment, serving for a good cause for the society.
Wonderful. I love the answer. Let me move on to my next question, Yudhajit. So, what is one random skill that you would like to learn?
Well, I would like to learn coding, because I think I come from a finance background. I did my economics, and but technology is something which I'm very much fascinated with, and especially I take deep interest in terms of building a platform. And I realized that I've hit a block because I don't have certain skills, and therefore I would definitely like to enhance this aspect of.
Oh, see that you are very passionate about technology. Yeah, nowadays we have so many platforms which will enable us to learn coding fast, and wish you all the best on that. Okay, so
Right.
let me fire another bullet now. Uh, what is one question that you have that has been there on your mind for which you never got an answer so far?
Well, this question has not only intrigued me, but this question has intrigued a lot of practitioners in our profession historically. Is the investor behavior, investor psychology, and that is something which I'm very baffled, because how investor responds or reacts to a particular situation is very different, and the stimuli to all those reactions, how it affects psychologically, is very unique to every person. Now, there are a lot of research which has been pioneered by behavioral finance uh, professionals or professors like Daniel Kahneman and Richard Thaler, and you get to learn a lot from there. But fact of the matter is, at the end of the day, when you talk to people, when you deal, day in and day out, and then despite data, despite approach, you still fail to understand that more often than not, succumb to, I would say, certain emotional bursts and take long decisions. So I wish I could find something which is more discerning to have a solution to this kind of kind of responses.
You never know what machine learning and artificial intelligence are going to take us to. Definitely, there might be one day where we will go through a entire body scan or mind scan kind of thing, and somebody can interpret what others
Right.
are thinking, and likewise, it might. I'm not sure how the future is going to look like. Yeah, very interesting. So with that,
Absolutely. Absolutely.
yeah, with that, let me fire the last bullet out of the rapid fire. So, given a chance, which
Right.
celebrity would you like to meet?
Celebrity.
Yeah.
Well, I would definitely like to Mr. Sanjay Bhattacharya. I don't know whether how many of you know about him. So he's considered as a Warren Buffett of Indian financial markets. To me, he's a celebrity because I've known him personally, and I've read a lot about him. I've heard his sessions, lectures, and his knowledge on financial or personal finance or markets are highly respected and regarded across the industry. Therefore, I would take the opportunity, to have a fireside chat with him and learn from his insights. I mean, I don't know. I mean, a celebrity in our profession, I would consider that to be a he to be a celebrity than choosing someone from the entertainment industry.
I get it. So one thing that is coming again and again throughout the conversation is your passion for learning. Even in this one, you wanted to meet
Right,
someone and learn. Right? Yeah, very interesting. So that's a fascinating rapid fire. With that, let me flip back to the mainstream and ask you one final question for today's episode.
right.
What will be your one piece of advice to those aspiring to make big in their careers?
See, I would suggest that visualizing oneself is very important and very critical, and visualizing as an entity encompasses one professional journey as well as personal life is very important. And I feel that as a human being, you need to juggle various roles, need to balance so that you maintain that balance and then can progress uh, in your career as well as in your personal life. So I think what I would advise somebody is to visualize your development, have a keen desire to learn, stay humble, and stay curious, and look at optimizing the time you have in learning, in enhancing your skills. And that doesn't necessarily mean it all has to be very much profession or career oriented. It can be hobby, it can be and anything can help you. Like for example, the discipline I've learned from martial art has helped me and a more successful advisor, because I kind of tried applying those lessons I've learned by being more disciplined and focused. Similarly, there could be a lot of skills that you can pick up from your hobbies, and you can align that with your personal or with the professional development. And I think what I would say is that you need to keep on exploring what you like, and what are the lessons you can pick up from there to enhance yourself as a better human being. So I mean, that is my simple word of advice.
Great. Splendid advice so far. Yeah. And Yudhajit, this has been an excellent conversation. And thank you so much for being part of TGV's journey in shaping the careers and lives of millions across the globe. And would love to have you again on the show covering topics for the young professionals, mid-career and senior professionals, as well as entrepreneurs. So look forward to the next episode with you.
But Naveen, thank you so much. It's an honor and a privilege to receive the invitation to get an opportunity to interact with you. I thoroughly enjoyed having a very engaging session with you, and I look forward to being a part of this session again. Thank you so much for inviting me.
Thank you and pleasure hosting you. All right. So, folks,
Thank you.
before we move into the trivia section, here is a request to all of you. In case if you have loved the episode just like I did, and if you found it useful, request you to share with at least 3 of your friends or colleagues who can benefit from TGV. Thank you so much in advance. Now, let's flip into the trivia segment of today's episode. And today's trivia is about business funding. You know, almost 70% of the small business owners use personal funds during the financial crisis. And that's how somebody is really passionate about in order to flourish their business, and they're ready to sacrifice their personal funds, so with the hope to grow their business. So likewise, many people who use their personal funds, and before they use their personal funds, my advice is probably look at some investment options that are available, because of late we have been interacting with many startup investors and all. Right now there is so much of capital that is available. All we need is just to have a right pitch and approach right set of people and get the funding without impacting the family or without impacting your lifestyle. So that's all for today. Would definitely love to hear your comments on this episode as well as on all TGV episodes. Thank you so much for tuning in. There is more in store, folks. Stay tuned. Take care. Be safe. And until next time, bye bye. See you all in the next episode with another wonderful guest, and we cover another amazing topic.